Welcome to the Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is January 10th, 2025. S&P is trading at 58.24. My name is Ian McMillan. Today I am joined by Kevin Ferrari. So 58.24, Kevin. Haven't started off an episode with a number that low in quite a while.
Yeah, it's been a couple weeks for sure, if not longer.
Yes, since the
really November.
November, it would have been the Friday before the election.
Yeah, it's definitely this 5,800 level. I mean, broadly speaking, depending on how you draw it, maybe like 5750-ish, somewhere in there. I mean,
yeah,
you really hope it holds here.
Like, yeah, this, are we going to fill this gap, right? We have the election gap. Gap's not super abnormal. Unfortunate that most sectors, most individual stocks, I think just the Russell as far as indices, or is the Dow giving this back as well? Dow has given it back. Dow actually below the close from that Tuesday. So if you remember, most of the move happened overnight, right? So then that shows up. If it's not futures, it's going to show up on the Wednesday gap at Wednesday the 6th. So lots and lots of areas in general into those gaps or through them, the Dow being one of them. I got to be honest, doesn't leave me with a super warm and fuzzy feeling.
No, not really.
I'm not saying it can't be fixed, but they're not fixing it yet.
Right. Yeah, I mean, because even if you look at kind of more your safety sectors like staples, I mean, pretty much been selling off since the beginning of December. Utilities, I guess, kind of looked essentially the same, but towards the middle of December have leveled off, basically been moving sideways since then.
Staples below a 200-day moving average. I don't know. So what do you think about that? Staples, one of the first to go below a 200-day moving average.
Yeah, I guess academically speaking, right? That wouldn't.
It's kind of weird.
No.
You think it would be one, right? So S&P not below a 200-day. NASDAQ's not. Mid caps and small caps close. Dow not below a 200-day. But Staples, I don't know. If we're in a rush to get out of Staples, I don't know how that makes me feel.
Yeah. Then where are we going? I mean, if it was. If we were talking like below a relative 200-day only and on an absolute basis, they're at least holding up. I mean, that'd be a different story, right? Like if you're trying to get out of staples into something more risk on, but if you're just on an absolute basis exiting some of those areas, I mean, that's a kind of a different story.
I mean, I guess healthcare has been below a 200-day for a bit.
Right. Really, staples using XLP, if it kind of holds this $76 area. I mean, there's a lot of chop in there if you look to the left for a couple of years. It wouldn't, I guess, be out of the question to kind of bumble around in here for a while. But
yeah, I guess this could be a retest. I don't know why we have to go back this far. Would have much rather gone sideways. Energy getting a little bit of a move this week. Also a sector that's below its 200-day, but that thing's been sideways for 2.5 years at this point.
Right.
So I put that in a slightly different category. Crude had a big move. You shared some returns before we hopped on for the week. What were the outperformers for the week?
Yeah, at a sector level, really the only thing as of a few minutes ago anyway that was positive was materials, energy, and healthcare, basically the three sectors that have been kind of getting beat up the most.
I will say that. Do not own any of that, and neither do our clients. I guess we got a little bit of energy and like one healthcare stock in the ETF, but
right.
I mean, those were probably your three worst sectors of 2024. Staples up there too, but I mean, Staples, real estate was up there, but those three definitely were laggards last year.
And I mean, on the industry side, airlines kind of leading the way. Pretty solid week, which really the airlines have been looking pretty constructive for, I don't
Yeah.
know, at least a month, maybe a little longer.
And that's one of those. I mean, look at airlines jets out to new highs today.
Mm-hmm.
I guess you would have, it's been consolidating for the last month. That was kind of maybe a spot to get in, but absolutely huge. Yeah, they like the airlines.
Mm-hmm. I mean,
I'll
really,
give
the kind of travel theme for the last couple months, really was pretty strong. Like some of your hotels doing pretty good. The cruise lines were rolling there for a while. I mean, those have kind of pulled back a little bit, but yeah, at least something's holding up, right? Gold
yeah,
miners
cruise
pretty
lines
good
look
week.
good.
So
You said gold miners?
yeah, which is why I think materials.
Yeah, what are we doing? Are we buying gold? We going all in?
I
It's kind
mean,
of on an absolute basis, it looks fine. Like it's
right?
constructive.
Yep. Yeah, I mean, if you were looking for a place to jump in, I mean, depending on what you're using, like GLD above 250 looks pretty cool.
Yeah. On a relative basis, what do you think? I don't know. What we need is some gold ETFs priced in foreign currencies.
Yeah.
That'd be better than gold priced in the dollar, which has not really stopped
No.
going up. Back to, I mean, we're pushing 110 right now on DXY. Should be our highest level since, over 2 years, about 26 months. Strong dollar. So we are still in the strong dollar is a headwind for stocks environment. That could change. Right now, market participants not really liking strong dollar, or maybe it's they don't like the higher rates. I don't know.
Right.
Rates out to 30-year yield also back to like 14-month highs.
Mm-hmm.
Back to where we were in November 2023. So no slowing down with rates. Now that's a gap fill if you're using like a TYX. So we'll see if that means anything or if we just cruise right through. But rates, again, probably should not be a surprise that rates have consolidated for a little over a year. And as much as we have spent talking about interest rates as a nation in the last 12 months, it didn't move a ton 2024.
Mm-mm. No, essentially
Well,
sideways.
essentially, okay, I guess so. November, December 2023, we had a big drawdown in rates, right? Starting in January 2024. Yeah, we're at 4% on the 30-year. We end the year at 4.8%. So you could say that, but truly you look at it on the chart. And this looks this looks constructive too. If this was a stock or any other asset, I would say, yeah, I think it goes higher.
Mm-hmm. Right.
All right, so rates higher, dollar higher. So hopefully a stronger dollar is at least keeping commodity prices down, right?
Yeah, I would say for the most part. I mean, kind of talked about it a little bit. Cattle keeps moving higher. And been
Cattle.
pretty consistent.
Yes, it has been.
So I don't know if that's like a Chick-fil-A commercial there, eat more chicken. I guess I don't know how that plays out. I guess grain's pretty quiet. I mean, corn more near term has kind of an interesting look.
Yeah, wheat cheap. Wheat's pretty cheap.
Mm-hmm. Soybeans too. So if you're looking at broad kind of basket commodities with the pop in oil, I mean, they look a little bit more lively now.
Yeah.
But it's not like you're seeing, real broad participation in the commodity front, at least necessarily now.
Oil back to, multi-month highs, but 75 a barrel. This is not, this is where we've been for basically for 4.5 years.
No, and it's struggled here before. So it's not like it's moved above a really important level to where we're going to see, or at least expecting kind of crazy appreciation.
Nat gas On the other hand, nat gas will close the week out at 2-year highs.
Mm-hmm.
So, for those of you that use natural gas, as my wife has recently realized, expect those bills to be a little bigger in the coming months. Any other commodities that jump out with you? I'd say coffee stayed pretty strong.
Cocoa is one I feel like we talked about for a while, hanging in there.
Lumber's still pretty weak. Not a huge move in lumber. Sugar's doing better. Sugar's getting cheaper. Also back to really where we've been the last few years. Sugar, same price for sugar we were also paying in 1974. So anyone wants to give you any worries about the price of sugar, no inflation there. Same with milk. Paying the same price for milk you were paying in 2007.
Yeah, orange juice kind of slowing down. I mean, that was one that was
Juice,
performing pretty well there
rice.
for a while.
Yeah, orange juice really gave a lot of that move back, didn't it? You can have a cheap meal out there: rice, soybeans, some toast, glass of orange juice. Yeah, probably want to stay away from the coffee and beef though. Beef sausage,
Which is tough. Kind of a steak
it is
potatoes
tough.
kind of guy. So
I mean, imagine telling your average American that's what you need to stay away from.
mm-hmm. I don't think it's worth it. I'll pay a little bit higher for beef. But yeah, nothing too crazy in commodities. You know, and I guess the thing that's kind of nice to see, which, junk bonds kind of around this 95 level, you'd like to see that hold, but relatively speaking, your lower credit quality bonds still seem to be kind of relative outperformers yet, at least as of now.
J&K versus AGG, new highs this week.
So it's not like that risk on relationships necessarily flipped yet.
That's a good point. It's a very good point.
So that's good to see.
Still now, and I haven't looked at credit spreads. Let's see what our credit spreads are doing. I mean, flattened out. They're not screaming upwards
Mm-hmm.
where we were at the election. So we'll see if that means anything in the coming weeks. Maybe you gotta go sideways before you turn upwards. I don't know, but to your point, J&K, I think it's a fair point to say not a ton of warning signs from fixed income quite yet.
I think it's kind of one of those weeks where it seems to be like a wait and see week. See what you get, next week or the following week. Kind of testing some of these gaps, holding the bottom of some of these ranges so far. So, I mean, it could be, just as simple as we're testing the bottom sides of some of these ranges and then, we're back up next week. But So I guess one of those things until they break it. I mean, you really have to kind of assume that things are going to hold here, but it doesn't necessarily leave you with any warm and fuzzy feelings to see kind of the broad selling, though, necessarily.
Broad selling, right? Breadth has been bad. We've had some spurts of bad breadth, over 2024, but certainly mid-December, late December, we started getting some less than stellar numbers. I know only like half of the S&P is above 200-day. I think the average stock is below a 200-day. I mean, NYA composites sitting right there.
Apple lose 235 here is kind of the tough one. I mean, that's a pretty bad look.
That is definitely not what. That's a tough candle. 4% on the day.
Nvidia getting hit pretty hard a couple days ago, losing 150. That hurts.
Yeah. And I think, with Apple, if you're going to use it as a tailwind, right? Broke out late November, early December. We got to cheer that, right? Oh, look at Apple, look at Apple.
Mm-hmm.
It's going to be a good tailwind for the market. And it was for a bit, but yeah, we've now given all of that and then some back.
Yeah, so
Microsoft continues to can't really get above this 430 level. Amazon's held together okay as far as mega caps.
Yeah, it's not like all of your Magnificent Seven are.
Google's held up fine.
Right.
But yeah, Apple, and unfortunately, it is an important one.
Yeah. I mean, Meta's hanging in there. Kind of a little bit of a mixed bag in the mega cap space, but I mean, it's one of those things where, I don't know if you call it kind of the weight of evidence, right? Where you're starting to see some of these pullbacks and some of these kind of more near-term intermediate levels start to break, where it gets to the point where would I be necessarily shocked if like indices started breaking down now following this? I mean, no, but you can't necessarily jump the gun and assume that's going to happen, right? I mean, long-term trend's still up, so
Long-term trend's still up. I'll tell you, another one I'd put on the unfortunate move, semiconductors.
mm-hmm.
Nice big pop on Monday, and we have spent 3 days. Market was closed. We've spent the last 3 days giving all that back to where we were beginning of January. So just those things, and on the back of, like you said, NVIDIA, really unfortunate look there.
TSM trying to hold the breakout. Broadcom's kind of an interesting one. I mean, that's
Tesla lost its breakout to all-time highs.
no.
Now, I mean, you could say it's just like a little bit of a deeper retest or something. I could see that. But technically, probably fits the failed breakout category. It's not a death blow, but things continue to kind of, I don't know, we're losing soldiers underneath the surface here.
Yeah, things are just starting to get kind of messy.
And they've been messy. I get it. You could say that. They've been messy if you look at breadth. Well, our benchmark's the S&P. I'd say the S&P really has been fine until today. If we were to close here, I think that's an unfortunate look on a price chart.
Mm-hmm. I think if it loses that gap, it'd be a little bit more nervous.
Oh yeah, that would be. Then I assume you're going at least to the 200-day. I mean, maybe this 56.50, but the 200-day might even be there by then.
Well, were we talking about that a couple days ago?
Yeah.
To where if we, because let's say, I mean, you lose 5,800, then I mean your next, level that you'd expect to kind of hold is like what 56. 60, we'll call it, somewhere in there.
These July highs.
Yep. Which, and kind of to your point, I mean, we're getting pretty close to that. The 200 days approaching that pretty quick. So
you'd have some.
I mean, you'd have some important levels there converging. I mean, you're definitely going to find out at that point, right? I don't think your line in the sand gets much stronger than that.
We know ADPV will kick into cash if we go below the 200-day. And of course, the podcast this week brought to you by the Adaptive Select ETF. Listed on the NYSE under ticker ADPV, helps investors access two of the most prevalent factors in markets, momentum and relative strength, through proprietary identification methods. The Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend, and since not all market environments are the same, Adaptive Select seeks to prevent extended market declines by moving to short-term treasury bills and cash during market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. As always, investing involves risk, including the possible loss of principal. ADPV is distributed by Quasar Distributors, LLC. Mentioned earlier, small caps, mid caps. Man, there's a lot of stocks that are right there, and then they've got these. I don't like those charts. If you took like a IWM or an MDY, it feels so bear flaggy to me. Barely got any bounce out of them the last couple weeks. I mean, they got a lot to prove. I guess that's saying nothing new. They've underperformed for 2 years now. Maybe it's another year. Maybe the mega caps. And MGK, it's above a relative 200-day. We'll see.
Yeah, MGV pretty much right at its 200-day.
FANGs, FNGS kind of losing its consolidate. I don't know. We'll see. There are cracks in the foundation out there. Not to be an alarmist. And we talk about, hey, bull market will come to an end at some point, or at least this stretch of it.
Right.
I think we got to keep in mind when we just had a bear market in 2020. So we're really only 2 years into this. You could argue we're 1 year into it because we just broke out to all new time highs above 4,800 last January, like a year ago, mid-January. So we didn't get a 10% correction last year, or if we did, it was like right on 10% or 9.5% or one of those things.
Time will tell, right?
Yeah, I don't want to be. I like getting on here and talking about uptrends.
It's definitely a lot easier.
Yeah.
But I don't know. I mean, the greater frequency, kind of those more corrective or like moves right in recent history, and like I don't know, I kind of start to wonder, is that going to be the MO going forward now? Like, is it going to be more common than it was in the past, and that theme kind of continues forward? It's hard to say.
Yeah, VIX. I mean, VIX is back to 19. I guess that's not terrible. We had the big spike mid-December. Of course, there's a lot of stats. I think I remember one. And anytime the VIX has moved over 50% in one day, and like a month later, it's substantially lower.
Right.
Like every single time. And I don't know, maybe that's going to be our first, like, every, once in 100 year, or, Dave loves to talk about every year's there's multiple, oh, this has never happened before, or this hasn't happened since 1832, stuff like that.
Right.
So, I don't know, maybe the VIX will be one of those. Anything else you'd like to leave our listeners with today, Kevin?
No. I mean, I just think kind of what I said before. It's one of those things where, I mean, you start seeing enough things sell off, it kind of creates that condition where if we start losing some of these more important levels on the major indices, would I be too shocked? No, but you can't really act until that happens necessarily, right? It's just one of those, it just seems like one of those wait and see weeks, really, so far. See if the gap holds on SPX. If not,
Is it
200
looking better
days.
overseas? Are we supposed to be buying?
Emerging markets definitely doesn't.
Oof, terrible. Yeah, they're below 200 day. EFA is below 200 day.
Mm-hmm. Latin
These
America
are
hasn't looked good for a while.
maybe Germany, the only place in Europe above a 200 day moving average. I guess the DAX in their domestic currency, DAX in euros. Yeah, euros looks fine.
Mm-hmm.
DAX in dollars, not that good.
I mean, Argentina's still holding up. No issues there.
Argentina. What about our friends in Israel? They're still doing fine. Yeah, Israel's holding up well. New relative pies. So I'm not the best week this week, but
Yeah, it's kind of, if you look at EIS.
yeah, I don't know if I'm buying EIS now.
No.
As we get back to the late 2021 highs.
Yeah, kind of hit a little bit of a speed bump there.
And got an RSI divergence. So we'll see. Maybe there's nowhere to hide anymore. Maybe this is it. Eventually, we got to reach this point. So, all righty. Well, thank you so much for joining us today, Kevin. Really appreciate it.
Wish there was more nice things to talk about, I guess.
Maybe next week.
Right? I mean, it's not like the uptrend's over. It's just we'll find out. That's a nice thing, right? We'll always find out eventually. And we kind of know the steps that have to happen to get to that point. So now it's
we
just
do. I think you laid it out really nicely. Below 58.50. Get this gap. That would be the election gap. See if that gets filled. It's going to take you straight to 56, whatever you want to call it, 70, 56, 70, the July highs.
And the 200
below
day
that, you've definitely entered slippery territory.
Yeah. I mean, the 200 day is like 4.5% away. So,
yeah.
And I mean, it's not like that's a crazy move to go and test the 200 day.
No, it's not.
And then, I mean, then we'll find out what everybody's about.
We will.
And that's game on from there, right? One way or the other.
Yeah. Are you going to be sitting in cash, twiddling on our thumbs, or the uptrend stays intact?
For sure.
All right. Well, have a great weekend, everyone, and we'll see you next week.
Yep. Take care, everybody.